Hey everyone! In today's video, we're putting a powerful trading strategy to the test by combining the VWAP and MACD indicators. We'll code the entire strategy in Python, optimize it using Freqtrade, and run backtests to evaluate its performance. Let's dive in. Let's first break down the key indicators we'll be using in this strategy. The VWAP indicator, or Volume Weighted Average Price, shows the average price a security has traded at during a certain period, taking into account both price and trading volume. This means prices with higher trading volume have more influence on the average. It's often used to see whether the market is generally moving up or down. In our strategy, we'll use a rolling VWAP, which means it updates continuously over a set window of time instead of resetting each day. This helps us better follow the market trend and ignore small, random price movements. We'll use a period of 200, so the rolling VWAP will be based on the most recent 200 data points. This gives us a more stable and reliable view of the market trend. When the price is above the rolling VWAP, it often shows that buyers are in control and the market may be trending upward. When the price is below the rolling VWAP, it often shows that sellers are in control and the market may be trending downward. Next is MACD, or Moving Average Convergence Divergence, is a popular momentum and trend-following indicator. It helps traders understand the strength and direction of a trend by comparing two moving averages of price. There are several ways to interpret the MACD, but in this strategy, we'll focus on its core components, the MACD line and the signal line. When the MACD line is above the signal line, it suggests that momentum is shifting to the upside, indicating a potential uptrend. On the other hand, when the MACD line is below the signal line, it may indicate that the market is losing momentum or heading into a downtrend. This comparison technique is simple yet powerful and is often used to confirm the direction of price movements or filter out false trends. The third indicator is the EMA, or Exponential Moving Average. In this strategy, we'll be using the 200 EMA, which is a widely followed long-term trend indicator. When the price is above the 200 EMA, it generally indicates a bullish trend, meaning the market is trending upward. When the price is below the 200 EMA, it typically signals a bearish trend, suggesting the market is trending downward. Now that we've covered our indicators, let's talk about how we analyze trends and generate trading signals. To enter a long trade, all of the following conditions must be met. 1. The price crosses above the rolling VWAP, signaling a bullish trend. 2. The price is above the 200 EMA, confirming the long-term uptrend. 3. The MACD crosses above the signal line, indicating upward momentum. Once all three conditions are satisfied, we enter a long position at the opening of the next candle. For risk management, we set the stop loss just below the signal candle, calculated as signal candle close minus 2 times ATR. For the take profit, we apply a 3-to-1 risk-reward ratio, placing the target at 3 times the stop loss distance. If a candle closes above the take profit level, we exit the trade and lock in our profits. Next, let's take a look at how we set up and manage short trades. To enter a short trade, all of the following conditions must be met. 1. The price crosses below the rolling VWAP, signaling a bearish trend. 2. The price is below the 200 EMA, confirming the long-term downtrend. 3. The MACD crosses below the signal line, indicating downward momentum. Once all three conditions are satisfied, we enter a short position at the opening of the next candle. For risk management, we set the stop loss just above the signal candle, calculated as signal candle close plus 2 times ATR. For the take profit, we maintain the same 3-to-1 risk-reward ratio, placing the target at 3 times the stop loss distance. If a candle closes below the take profit level, we exit the trade and secure our profit. Now that we've covered the strategy, let's move on to optimizing it for better performance using Freqtrade, a free open-source crypto trading bot built with Python. If you want to dive deeper into Freqtrade, check out the full course linked in the description. Here's the plan. We'll test the strategy on the 1-hour time frame. The data is split into 2 sets. In sample, 8 months. Used for tuning strategy parameters. Out of sample, 4 months. Used to test the strategy on unseen data. We'll focus on optimizing the following key parameters. EMA trend filter. To enable or disable the EMA trend filter. VWAP and MACD cross windows determine how long each crossover signal remains valid, since these signals don't always happen at the same time. ATR multiplier and risk ratio. Used to set effective stop-loss and take-profit levels. We'll use Freqtrade's HyperOpt tool to find the best combination of these settings, aiming to maximize profit while minimizing drawdown. Once optimized, we'll run a backtest to see how the strategy performs with real market data. Let's take a closer look at the backtesting results. The strategy was tested on TON perpetual futures with a 1-hour time frame, covering the past 12 months using the optimized parameters. Over the testing period, the strategy showed a 256% total return. During the same time, the overall market saw an 18% decline, which provides a point of comparison. The maximum drawdown recorded was 12%, indicating there were some periods of loss, but the overall equity curve remained positive. Looking at the performance chart, the strategy produced a steady upward trend, with no significant drawdowns, suggesting relatively stable behavior across different phases of the market. The optimization was carried out using 8 months of in-sample data, followed by testing on 4 months of out-of-sample data. This helps assess whether the strategy generalizes well to new, unseen data rather than just fitting past performance. If you'd like to download the Freqtrade strategy file and explore it further for your own research, be sure to check out the link in the description below. I've also created a pair-optimized version, which allows you to trade multiple pairs in a single setup, each with its own fine-tuned parameters to help separate risk and potentially enhance performance. If you found this video helpful, don't forget to hit the subscribe button, turn on notifications, and share it with your friends. Thanks for tuning in, and I'll catch you in the next one.